Hey traders, today I'm revealing some more secrets from the trading strategy behind my $1,000 challenge algorithm. We'll be looking at the next two sets of buy conditions, and I'll be explaining the rules that I use to trigger my buy signals. I'm also giving away 50 Tether to one lucky subscriber in the next week, so if you want to be in the draw, then hit the like button and drop me a comment down below. So you can see here the strategy is still showing is up 7% with 6 signals in 6 days. So this means we haven't generated another signal for nearly 2 weeks now. The reason for that, as you can see here in the Bitcoin daily chart, is that the market's been in a downtrend since then, with Bitcoin now sitting at under $40,000 a coin. We had the Bitcoin ETF approval 2 weeks ago, which was already priced into the market. All these fund issuers have been front-running and pre-bought their Bitcoin, and since then they've been offloading their excess into the market. You can see from this screenshot, which was identified by a whale watcher account on Twitter, or X, it seems that $900 million worth of Bitcoin was moved to Coinbase earlier this week, so there were fears of further downward selling pressure before we see a rebound. We also had some updates this week from the Coinbase and Binance lawsuits by the Securities and Exchange Commission in the US. The long story short here is that cases are progressing to discovery. I'm not going to dig into the detail here, but if you're interested, then here are some good resources that I follow on X. Crypto Law US is the John Deaton channel, Meta Lawman is James Murphy, and the third is Jeremy Hogan, who tends to focus more on the Ripple suits, but he does drop comments on the other suits as well. Let me know in the comments, what do you think about the Bitcoin price drop at the moment, the ETF, the lawsuits? I'm always interested to read and debate these things, so let me know and let's get into it. If you remember from my last video, this strategy trades on the Solana Tether pair, and Solana tends to follow the Bitcoin price with a little bit more volatility, so we've seen a similar pattern here with Solana now sitting at $85. This is a spot strategy, so it doesn't sell short when the market's falling. It waits for a sign that we're looking at a reversal of the trend before entering back into the market, when we're more confident that we're in a bull or rising market. Interestingly, if you look at the daily on-balance volume for Bitcoin at the moment, although the price has been falling over the last 2 weeks, the OBV has been relatively sideways, so this might be an indicator that we're ready for a reversal. It'll be interesting to see how things play out over the next couple of days. The great thing for me though is that I don't need to speculate and I don't need to panic. That's the reason I use algorithmic trading. I've already set the conditions under which I want to buy and sell, and I can look at these indicators with interest and not sweat over whether it means I should buy or sell. My algorithm's doing the work for me on Algo. It's a completely free software. You can use it to build your own strategy, backtest it, and run it. And for the next few weeks only, you can download this strategy that I'm using in the $1,000 challenge for free. I'll leave a link in the description below. I've uploaded some other videos as well on how to use the software, so go and check them out. So let's take another look under the hood at some more of the rules in my strategy. Remember, I'm not a financial advisor. This isn't financial advice. I trade algos and cryptos, which is a high-risk investment. You could lose all your money, so you must do your own research and thoroughly backtest any strategy before you implement. So last time I went through these first set of buy conditions. If you want a reminder, you can go and check out that video. So here I'm going to be diving into the next two sets for you. Remember that the last set of conditions had a daily focus. Here, however, we're digging into shorter term movements. We're looking at 15-minute timeframes mostly. Now, the reason that I've grouped these two together is that they're very similar. They both have 7 sets of conditions, and you can see here that the condition block has an equal sign. So here we need all 7 conditions to be met in order for a buy signal to be triggered. 6 out of these 7 conditions are the same for these 2 blocks. So I could have just had one buy block and included an OR condition for the 7th condition. It's just the way that I built the scenario through a process of trial and error that we came to this setup. So in either case, if all these conditions are true, then as before, we set the buy value using this masked clamp block and we feed it into the buy block. So we're buying 100% of the value of the account. If you need a reminder on this concept, then check out the last video again. So what are these 7 conditions? So the first one is we're looking for the 15-minute on-balance volume to be trading higher than its moving average. As we've said before, OBV is an indicator that gives us a view of momentum and can signal whether smart money is being traded. If you need a refresher, check out my video on OBV to understand how this works in more detail. So we're feeding the 15-minute price and the 15-minute volume from the data watcher block into the OBV indicator block. And then we're feeding this value into a moving average indicator block and feeding both into a condition block to check whether one is higher than the other, to give us an indication that there's momentum in the market and that the price is on the rise. The next few conditions I'm looking for are based on the Bollinger Bands. Again, for a refresher on Bollinger Bands, you can check out my video where I explain them in detail. So just like we had in the daily rules, we're looking for a sign that the 15-minute low price has dipped below the lower band at any point over the last 6 15-minute periods and then climb back up again, so we know there's a correction happening. You can see here I'm feeding the price from a data watcher block into the Bollinger Band indicator block, and then from here I'm feeding the lower band value and the price into these lag blocks. So we're making a comparison of the price in the lower band 15 minutes ago, 30 minutes ago, 45 minutes ago, and in each case we're checking whether the price value was below the lower band value. Okay, so we've established that the price has been below the lower band in the last hour and a half, and then next we're looking looking at the current 15-minute candle and for it to have also had a slow point below the lower band, but has now closed above it. We're doing this by comparing the price and the band value in these condition blocks here. You can see here that we're feeding the low price and the closing price into these condition blocks, along with a lower band signal from this indicator block. So we're looking for evidence that the price is rebounding from a low point and starting to make a correction. So that's 4 of the conditions. For the 5th one, we're heading back to a daily data watcher block, and this time we're looking at the relative strength index. Again, I've made another video that explains RSI previously, so feel free to go and check that one out too. So we're looking for a daily RSI of less than 75. Now 75 is a high figure, I know, but remember that this set of conditions is generally based on 15-minute rules. So by setting a high RSI condition on the daily chart, it's really just to filter out signals that might be getting generated in really oversold conditions. Like the OBV rule, we want to make sure that we're trading in a rising market and we're catching the upswings only in this strategy. So we've got the daily data watcher block feeding the RSI indicator block, and this is feeding into a condition block along with a maths clamp block. I could have used a fixed number block here as well, that would have worked too, but the clamp allows you to set a range rather than a single number. For the 6th condition, we're heading back to the 15-minute price and we're looking at the whole moving average of this price, or HMA. We've got a condition checking whether the price is above its whole moving average. The HMA, for those that don't know, is a weighted moving average that focuses more attention on more recent data points than a simple or an exponential moving average. I released a video on this earlier in the week, so if you need a refresher, then go and check that out. So if the price is above the HMA, then we've got another validator telling us that the price is on the rise and that we've got momentum behind it. So the last condition is where the difference occurs between these two sets of conditions. In both cases, we have an AND block, so we're looking for 2 conditions in one. The first one here, we're looking for the price to be more than its 400-part HMA. The last one was only 100 parts, so this is a slightly longer term look. And we're also looking at the OBV again. Now this indicator block is new. I've not spoken about this one on the channel before. It's a minimum in period block. That means that it's going to look for the lowest value in this range. I'm feeding the 15-minute OBV value in, and I've got it set for 20 periods. So here this block is going to look for the minimum OBV value over the last 20 15-minute candles. We're then going to feed this lowest value into the difference block, and we're also feeding in the current OBV value into the difference block. So we're calculating the difference between the current OBV and its lowest value over the last 20 candles. So we're then feeding the difference into a condition block that's comparing it to the value in this maths clamp block. So in this case, the clamp value is set to 10. So we're looking for a difference of more than 10% between the current OBV and the lowest OBV value over the last 20 candles. This tells me that OBV is on the rise and that there's momentum flowing back into the asset. So if this is true and the price is above its 400-part HMA, then this condition block will trigger for the first buy scenario. In the second buy scenario, I'm looking at the same conditions. However, I'm saying that rather than the price having to be above its 400-part HMA, I'm happy for it to be below. However, I've widened the difference for the OBV. So you can see in this maths clamp block, I've set it to 15%. So in scenario 1, we want the price higher than the HMA and the difference in the OBV to be more than 10%. In the second scenario, I'm okay with the price being below the HMA as long as the difference in the OBV is more than 15% rather than 10%. So that's all my conditions for these 2 buy blocks. If all 7 of these conditions are met in either case, then we're happy to re-enter the market. Let me know what you think in the comments below. How do you think I could improve the strategy? What changes would you make? Next time we'll look at the last of the buy conditions and then we'll start to look at some of the sell conditions. And we'll see if our strategy's triggered any more signals by then. Remember to hit the like and subscribe button and turn on the notifications for more algorithmic trading insights. Until then, happy trading and see you next time.